Today's pick number one is DTC. Solo Brands is a direct-to-consumer platform offering a variety of products directly to customers, mainly online. Its portfolio includes Solo Stove fire pits and accessories, Chubby's apparel, Oru kayak folding portable kayaks, and Isle paddle boards. The company is headquartered in Southlake, Texas. Solo Brands operates in the internet commerce industry, which is ranked 81st out of 252 industries by Zacks Investment Research. Recently, Solo Brands has encountered several challenges, contributing to its stock being perceived as oversold. Notably, financial analysts have revised their price targets for Solo Brands, indicating a cautious outlook. For example, Piper Sandler reduced its price target to $3 from $4 but kept a neutral rating. Similarly, B. Riley Securities lowered its target to $2.40 from $4, also maintaining a neutral stance. These adjustments reflect growing concerns about the company's future. The company's latest financial results for the fourth quarter and the entire year of 2023 included an impairment charge that significantly affected its quarterly bottom line. Moreover, Solo Brands offered guidance for 2024, forecasting sales between $495 million and $516 million. It anticipates a slight net loss for 2024, with an expectation of returning to a small net profit in 2025. This outlook suggests upcoming challenges but also hints at a possible recovery. Solo Brands stock has seen remarkable volatility, with a decline of over 62% since the year's start. This steep drop and the stock's overall volatility are seen as signs that it might be oversold. Investor opinions on social media vary, with some showing optimism based on the company's history of earnings surprises, while others express concerns over its management decisions and strategic direction. In summary, the cautious stance of analysts, the company's recent financial performance, and mixed investor sentiments contribute to the belief that Solo Brands stock is oversold. The company's ability to overcome current obstacles and follow through on its growth and profitability strategies will be crucial for its future performance. Today's pick number two is AMLX. AMLX Pharmaceuticals Inc. is a clinical stage pharmaceutical company. It focuses on developing a novel therapeutic for amyotrophic lateral sclerosis and other neurodegenerative diseases. AMLX Pharmaceuticals is based in Cambridge, Massachusetts. AMLX operates within the medical drugs industry, a sector ranked 88th out of 252 industries according to Zacks Investment Research. AMLX has been experiencing significant volatility and a sharp decline in price, mainly due to the failure of its late-stage ALS trial for the drug Relyvrio. This event has caused regarding the future of the drug's market availability, leading the company to pause all promotions of Relyvrio. The fallout from this development has had a profound impact on investor sentiment and the stock's valuation, contributing to the perception of it being oversold. Moreover, the stock's dramatic drop can be attributed to broader market reactions to the trial's outcome as investors reassess the company's future revenue potential and growth prospects. AMLX's decision regarding the continuation or withdrawal of Relyvrio from the market will be crucial in determining its financial health and operational focus moving forward. Investors and analysts are closely watching the company's next steps, including its exploration of potential paths forward and its efforts to understand the implications of the Phoenix trial results more deeply. The situation underscores the high-risk nature of investing in biopharmaceutical companies, especially those dependent on the success of key drug trials. Today's pick number 3 is MEI. Methode Electronics Incorporated stands as a worldwide leader in the creation of electronic components and subsystems. With its designs, the company produces and sells devices that make use of electrical, electronic, wireless, sensing, and optical technologies. You can find Methode's components across various key sectors like automotive, appliances, communications, aerospace, rail, and other transport industries, as well as in consumer and industrial equipment. Methode Electronics within the electronics connectors industry, which is ranked 91 out of 252 industries by Zacks Investment Research. Lately, Methode Electronics Incorporated MEI has hit a rough patch, which has made some market watchers label its stock as oversold. Let's explore a few reasons why this might be the case. Firstly, there's been an earnings miss and net loss. Methode Electronics reported a net loss of $11.6 million or 33 cents per diluted share for the third quarter of fiscal year 2024. This outcome fell significantly short of expectations, missing the consensus estimate by 40 cents. Furthermore, the company's net sales for the quarter were $259.5 million, also below analyst predictions. Then, we've seen a decline in stock performance. The stock's price has plummeted by 45.7%, now hovering around $12.35. This is a sharp fall from its 52-week high of $46.58. Another concern is the negative net margins and low return on equity. The company's profitability struggles are evident, with a negative net margin of minus 5.09% and a very low return on equity of 0.07%. Despite these financial hurdles, Methode Electronics has decided to continue its dividend payments, declaring a quarterly dividend of 14 cents per share, payable on April 26, 2024. This decision could be seen as an effort to keep shareholders' confidence during difficult times. However, it also sparks debate over the company's resource distribution given its current financial situation. With these factors in mind, investors and analysts are keeping a keen eye on Methode Electronics. Currently, the stock holds a consensus rating of hold among analysts, indicating a cautious stance towards buying more shares or selling existing ones. In summary, the mix of missed earnings, a significant stock price drop, and financial challenges suggests Methode Electronics is navigating through tough times. While the dividend declaration might offer some relief to shareholders, the underlying financial and operational issues indicate a turbulent period ahead. Investors are encouraged to monitor the company's future earnings reports and management strategies closely. Today's pick number 4 is CABA. Cabaletta Bio is a company working on cutting-edge health solutions. They're in the business of creating specialized therapies aimed at autoimmune diseases. Their main projects include several innovative therapies that are currently undergoing tests. You'll find Cabaletta Bio's headquarters in Philadelphia, United States. Cabaletta Bio operates within the medical, biomedical, and genetics industry, ranked 71st out of 252 industries by Zacks Investment Research. But why do people think Cabaletta Bio's stock is oversold? Let's dive into the reasons by looking at recent events and the overall mood in the market. First, the stock's recent journey has been a roller coaster, showing significant drops. This suggests that the market is reacting strongly to short-term news or following a trend that's affecting all biotech stocks. Next, there's talk about the company's upcoming earnings report. With investors uncertain about what the report will reveal, many are choosing to sell their shares early, preferring caution over potential surprises. Cabaletta Bio's participation in healthcare conferences is a mixed blessing. While these events give the company a chance to highlight its work and attract new investors, they also put it under a microscope, leading to speculative trading. Big names like Citigroup Inc. and the Swiss National Bank have shown faith in Cabaletta Bio by investing in it. This kind of backing boosts confidence but also sets high expectations, making any small misstep seem like a big deal. Analysts are generally optimistic about Cabaletta Bio, labeling it a buy. Social media too buzzes with positive vibes, yet such high hopes can make the stock more sensitive to any news, good or bad. Biotech is a field known for its ups and downs. A company's value can swing wildly based on clinical trial results, regulatory decisions, or the mood of the market. Any negative buzz can trigger a sell-off, even for firms with solid foundations like Cabaletta Bio. Social media chatter and trader sentiment, especially anticipation around company milestones or regulatory approvals, create a narrative of hope. However, this optimism can quickly fade if expectations aren't met or if the broader market takes a downturn. Considering all these points, it seems Cabaletta Bio's label as oversold comes from a mix of cautious trading ahead of major news, the impact of recent big investments, and the usual twists and turns of the biotech market. Today's pick number 5 is EXPI. EXP World Holdings is a company that offers cloud-based services for the real estate market, mainly in the United States and Canada. Through its website, buyers can look for properties in real time and sellers can list their homes. It gives both buyers and sellers access to a network of professional agents and brokers. Originally named EXP Realty International Corporation, it's based in Bellingham, Washington. EXP World Holdings is part of the real estate operations industry. It's ranked 186th out of 252 industries, according to Zacks Investment Research. Let's dive into why EXP World Holdings stock might be seen as oversold. We'll look at market trends, company performance, and the broader economy. Recent price movements and market sentiment. EXP World Holdings stock has recently hit a new 52-week low, showing a significant drop in price. This drop has sparked discussions about whether the stock is now undervalued compared to its actual worth. On social media, there's a mix of frustration from those holding the stock for a long time, speculation about where the stock is headed, and mentions of the company giving shares to employees. This last point could be causing selling pressure as employees decide to sell their shares. Company performance and industry trends. EXP World Holdings reported a loss in the fourth quarter as the number of agents decreased, pointing to challenges in its main business activities. However, the company also reported sales in the fourth quarter that were better than expected, showing some positive signs amidst these challenges. The real estate industry is known for its ups and downs, influenced by changes in interest rates, market dynamics, and what customers want. Recent discussions on social media about a legal settlement could also affect companies like EXP Realty by changing how competitive they are and the commissions they earn. Broader economic conditions, things like interest rates, inflation, and the general health of the economy have a big impact on the real estate market. Higher interest rates can make buying homes more expensive, which could hurt the revenues and profits of real estate companies. The stock market's reaction to economic indicators and policies related to housing and finance can also make a stock seem oversold if investors think these will negatively affect the company's future profits. Investment and institutional actions. The actions of big investors and investment firms like buying by Invesco Limited and increased stakes by Lazard Asset Management LLC can affect how people see the stock's value. But if the overall market feeling is negative, these actions might not overcome the downward trends. Market and technical analysis factors. Technical indicators like the Relative Strength Index or RSI are often used to check if a stock is overbought or oversold. A very low RSI could mean the stock is oversold and might be ready for a rebound based on technical analysis. In conclusion, although EXP World Holdings is dealing with challenges shown by its stock performance and market sentiment, there are positive signs too, like institutional investments and better than expected sales. The view that the stock is oversold may come from a mix of negative market feelings, difficulties in the real estate industry, and economic factors affecting investor confidence.